People sit on the sidelines a lot too and say the timing's not right. Again, we're talking about real estate today. So if you were to sit on the sidelines and say interest rates are too high, well, historically they're not. It's just an excuse that people tell themselves because they're not ready. You'll never be ready to pull that trigger. You just have to do it.
If you're an entrepreneur who's built success but feels stuck in the grind, this podcast is for you. On the Live More Show, we give you short, powerful conversations to help you become more tax savvy, time rich, and totally free. Here's your host, Melanie Sikma.
A lot of business owners look successful on paper, but still feel tied to the grind. My guest today is Ian Noble, a former multi-location business owner who exited his company in 2023, and he now helps entrepreneurs build passive income through real estate without becoming landlords. Ian's focus is on giving every dollar a job, understanding opportunity cost, and stacking success outside your business so you can actually be present when it matters. Today, we're talking about passive investing, post-exit decisions, and how to escape the time for money trap. And he told me right before the show that he has been an operator trapped in the grind of the business. So I'm excited for the value he's going to bring you guys today. Ian, the time is our most valuable resource. And so can you just tell up front why the listener should listen to this episode? Why is it a good use of their time?
I've seen both sides of it now. I used to be the person that spent all my time being the doer and making sure that I was involved with it all. And now I've kind of come to see what it looks like on the other side. So for any entrepreneur that's struggling with always being at their work or just being tied to it, personally, I was dreaming about it, thinking about it in the evenings. We've all been there. So it's helpful to know and hear from other people that used to be like that also, what it can look like on the other side.
Let's just jump into that. When was the decision that you were like, I'm done with this. I don't want to be an operator anymore. And when did you make that shift and how did you make that shift?
It came right around COVID. Our industry, so is the dry cleaning business, and we are dependent on people going into work, into their office, because that business sells image. And I lost 85% of revenue in a matter of weeks. So I had this operation with about 95 employees, multiple cleaning facilities, fleets on the road, and everything came to a halt. So it was survival mode. That was a fun challenge. I had never worked harder in my life, even though we had no business. It was just trying to keep the doors open. And when I had gotten through that and survived it a couple years later, we came back to pre-COVID revenue levels. A lot of our competitors had closed their doors. And then all of a sudden, business became more profitable. There was a silver lining in there to where everything was rolling much better actually than it was before. During that time, I had children, my first child in 2020, then another one in 2023. And I knew along the way that what I was doing at work wasn't healthy for the amount of hours and where my head was. If I was going to be a good dad, that wasn't going to be something that I could do both of. I just couldn't split my time and something had to give. And eventually the switch was turned off and emotionally I just was done. And I tried to break through that ceiling of going back and thinking, okay, I've got this great business and foundation. How do I take it to the next level? But I had been doing it for 14 years and I was just ready to try something different and to take advantage of an opportunity that came my way by means of a buyer who was interested in the business.
That's awesome. And then you shifted into what you're doing now with the passive real estate investing. How did you, jumping into this business, were you intentional about what it was going to look like before jumping in because of your experience before?
I was. After selling the company in 2023, I tried to jump back in and I wanted to buy a business pretty quickly. It's because it was routine and I liked the thrill of entrepreneurship. But what I fell into with passive real estate investing was a much different scenario because I was approaching it from an investor first mindset and I wanted to be hands off. Real estate was the natural progression for where it went because I had been investing in real estate since 2014. So I was buying rentals, like single family rentals, and then some small commercial properties. And I would funnel all of my money that I was earning from the business back into real estate. I had seen my dad do this over the years. And the hopes was that My hope was that I could replace my income through work with rentals so I could have the freedom to call it a day when I wanted to. And it never quite caught up. The business was doing well, but it was something that allowed me when I did sell to know that I'm not resetting at zero. I've built up this nest egg outside of what my primary career was. And because I love real estate so much, there's an overlap with a lot of business owners and high net worth individuals or wealthy people. Even though they're not real estate people, they end up finding their way into that space somehow.
Yeah.
Whether for entertainment or they want to become a landlord, whatever it may be, or tax strategy. So that was the natural path. And what really made it nice was that I was no longer putting in the hours that I was before. And I wasn't having this moment to where I'd come home and all I could think about was work, what employees were quitting, what staff personnel was having problems with whom. Again, maybe it was a poor rollout of systems, but I was so involved from an early age because when I got started, I was 21 and I didn't have any business acumen. There were no mentors. It was just go work hard and outwork everybody else and do as good as you can. So I thought that was the only way.
Mm-hmm.
Thing where I thought I needed to be the center of the equation, I was the bottleneck of that business. I got to where it needed to be, but to break through that glass ceiling, I was in the way. And so it was time for me to go.
That's great. Yeah. And I like how in your intro, we talked about how you help people get into real estate without being a landlord. I've heard there's a lot of headaches with being a landlord. So I guess explain the mobile home piece and why you got into that. And then I guess, yeah, like how is that less of a headache than being a landlord?
The reason it's less of a headache is because I'm specifically seeking out operators that do a really good job of running these mobile home parks. And we're aligning with them to where we're remaining fully passive. So there are headaches in every business, and people throw the word passive investing around a lot. It is very active behind the scenes. The investor gets to choose which side of the aisle they're on. But for every successful passive investor or anything that pans out the way that it should, there's a really good team behind the scenes that's working on it. So the reason that I liked that asset class specifically was there is an affordable housing crisis. Mobile home parks have been steady. They're not as cyclical as some of these other classes. You know, we see the ups and downs of apartments and office, especially COVID hurt office quite a bit. Mobile home parks have just been consistent the entire time, and it fit my profile for who I was. I wasn't a risky person. A lot of people in real estate will shoot for the stars and want to make big bucks on development and these things that a lot of credit to those that can successfully do it. But for me, since I had sold my business and I was an investor first, before I even had this business, it was what's good for me and my family and doesn't put our money at risk, but allows us to grow at something that I think is reasonable. That industry was comforting and was something that I thought, well, if I can get into something that's been steady for years and I'm comfortable earning a return that's good for me and it's low risk, why don't I do it? Not to mention there's a supply cap in that asset class. So cities don't want mobile home parks in their backyards. They give up tax dollars when doing it because they're not making the revenue that they otherwise could. Because in mobile home parks, it's a large plot of land. There's a lot of either dirt or asphalt parcels. And then there's property that's on top of it, but it's not real property. It's personal property. A lot of these aren't fixed to the... So cities don't get the tax dollars. Residents don't like them. And so as a result, you know, if you live in a neighborhood and if you get a notice about zoning and asking if you are good with a mobile home park going behind your fence, the answer is probably no. But the reality is there's a lot of really nice communities and a lot of parts of the US, you know, we don't see it necessarily in the city as much, but if you take a road trip around this country, there are a lot of mobile homes out there, mobile home parks. Beautiful, and they're well kept. So there's some pride of ownership. There's a supply cap, and people stay there a long time. It has a longer stay, on average 14 years, than anything else that's rented out. So if you're a landlord and you're renting a house out, well, that person may stay for 2 years at a time, but 14 is rare, and this industry provides it. So for those reasons, I really like focusing in that class.
Do you ever get like the elderly mobile home parks? Do you have any of those? Because my grandma lives in one, and it's actually like a really nice community, but it's all
Yeah,
people her age.
yeah. I'm personally not in any of them, but I know what you're
Okay.
talking about, and they're very nice. A lot of these places have community centers, swimming pools, courts.
Yeah, hers
People
does.
wouldn't
Yeah.
think that it's yeah. They're great. So low maintenance for the resident,
Hmm.
and so yes, and that's a common misconception. You obviously know because your grandmother was in one, but a lot of people just think that they are rundown trailer parks, and they're really wrong. They do exist, right? Same thing with houses and commercial property of any sort, but they're really nice ones. So we're looking for quality assets that have a little bit of upside. And again, the reason that I've aligned with people, I look for good people that I can partner with, and
Hmm.
then let other investors join me. So as a small business
Cool.
owner, I always thought I had to do it myself. That's how I got involved with real estate. And I'd say for anyone who is interested in real estate, it's a good place to start because you can learn what works and what doesn't. But I was running out of time. So I started to stack these properties up, and it was, 10 years down the road. And then I realized, this takes a lot of cash. If you continue to buy one property at a time, it can be difficult to scale. People don't need to scale, right? You can make a great living without it. But I was looking for a little bit more time freedom. I have 3 young children, and I didn't want to keep being the person wearing every hat. You
Yeah.
start to
Now
realize that, yeah,
that shifts me like when you were an operator for so long, was it really difficult to pull yourself out of that and allow yourself to just be passive? Because I feel like it would be like hard to change gears.
yeah, that's a great question. And yes, it was. It was the hardest decision going from I control everything to I control nothing.
Hmm.
And that's one of the challenges in the business is finding that person to where you have that much confidence in them to where you don't need to control anything. A lot of people struggle with this in entrepreneurship. They still think that they're better than everybody at every task. And the reality of it is you're not, or if you are, you need to hire better talent. So this is just a continuation of that. You're hiring better talent. You're letting them do the work. And it is difficult though. I started off with someone that I'd followed in the industry and seen for many years, put the trust in them, and that worked well. Then I found others before I got in the business of bringing people in with me, so we all co-invest as a group. I also learned the hard way, had an expensive mistake with somebody that selling something in real estate investing, but you can only do so much due diligence. And the questions that I know to ask today and the diligence that I know today is at a much higher level than what it was before. And so you have to really sift through the crowd to figure out who are the bad actors, who's just a great salesman. It's one thing I noticed too. I'm not a good salesman. I can get a good read on people, and your BS radar is always going off when someone's telling you this is the best deal. I'm on the opposite end of the spectrum. I want the people that are like, I'll forego a little bit to know that I'm protected and safe. And that's the lane that I play in.
Yeah. Yeah, that makes a lot of sense. Now, for somebody new to investing, you talked about passive versus active investing. Can you break down the difference for somebody that may be new to that?
Yes. So generally, if you hear the word active investor, it means that think of it like you're the landlord. You're acquiring the property, you're doing it all yourself, and you're managing your portfolio. On the passive side, you're putting your dollars in with another group, and they are running these deals. So you still have ownership. You get cash flow. There's usually terms that people come up with to what your return is going to be and so forth, but you're allowing yourself to be part of a larger group, but not having the control. So you asked the question earlier, is it difficult for entrepreneurs to give up control? Yes and no. I think it comes down to the individual, but if we look at ourselves in the mirror, time is finite. And if we're really good at running our business and we're dedicating our time to what makes us the most money, Which I will say that if you run a successful business, you need to put your energy into that business. That's where you get the money from to go invest into real estate and anything else. So you need to concentrate on what you're really good at, but then let other people work. It's almost like employing others without putting them on a true payroll to go out and build more wealth for you. So as you unlock it and start trying this out, one deal will not change your life, or two, especially if you run a successful business. But when people really start to notice it is when they can take advantage of the tax strategies, when they've done 4, 5, 6, or, over the course of a couple of years, then you take a step back and you realize I'm in a pretty good position, especially if you found the right people to partner with, because now you're getting ACH deposits in your inbox every quarter and it's fun. And you didn't have to stress about payroll or market or whatever else you do in your business to get there.
Yeah.
Someone else has done it for you.
Yeah. Is there anybody that shouldn't do passive investing, or is it like who's the right investor for it?
There are people that think, okay, I have money, therefore I'll call the shots and I'm going to have a certain level of control. It's not how it works. I think that if that's who you want to be, then perhaps you can work with somebody locally in a local partnership, but on a larger scale, that person isn't a good fit. Someone who wants full control isn't a good fit. It doesn't mean they can't participate. I think that expectations need to be set on the front end to where, look, you're paying for somebody else to do this for you, but if you really need that control, perhaps it's best you do it yourself. And we talked about active versus passive. One of the easiest things that, at least from my personal point of view, to assess it with is, I'm a landlord too. I own property by myself, manage that by myself. If you actually look back at your returns, you're doing a lot of work, sometimes for the same return or less. This is especially evident in single family rentals right now. If someone's to go and buy a house because it feels familiar to them and they can get started, if you look at the cash flow after interest rates today and what things rent for, you're really not making a lot of money. So there's usually a little bit of upside for people when this happens at scale, and that's only because of the way that commercial real estate is valued. You are taking, let's say, we're talking about single family homes now. Your investment or your property is only worth as much as the property next door because they're valued on sales comps. You have no control whatsoever. But commercial property is run like a business. And if you can add value to that, then you can drive the value up, sell it for higher, just like you could with your business if you're trying to achieve a certain multiple. So there's the opportunity to scale more, have more of a team, and to, again, take the back seat. But back to your question, you said who's not a good fit for it. I think it's just all about partnership. Even if you're a passive investor, you're still partnering with the person that brought you that deal or who you have the relationship with. I'm seeing that more than ever in the business because I don't run the day-to-day. And you'd think, why would someone ever talk to me when they could find out who the operator is and just go directly to them? Wouldn't they get a better deal? Like, if you're a business owner, you're looking at the bottom line and what's net to you in your pocket. And what I realized quickly in this industry is that's not the case. Everyone's aligned where if there's somebody that you have a relationship with and you trust, that's the person that you go with. And so the business does a good job of helping everybody win. And it's all about trust. Again, so if you're someone who doesn't trust anybody, then you're not a good fit for a passive investor. I'll end with that one.
So it's good for somebody that is okay staying in their lane. Their lane is to give them money and trust and let you do your job.
It's funny. You said that. There's a fix and flipper in town that we're doing a deal with. This is just a personal deal. And you talk about staying in your lane. He called me before this podcast and said, do you want to have any design input when we're doing this project? Because I'm coming in as the investor. I told him, no, I need to stay in my lane. That's what you're good at. Let me take the back seat and you take control. I think he was just being courteous and asking me. I know he didn't want me to be involved to that degree, but you're right. You got to stay in your lane and realize when you should be the captain of the ship and when somebody else should.
Yeah. I think that goes across with for our listener, any business that you're in, stay in your lane and know what lane you're supposed to be in. So, like for me at One Stop Tax Strategist, I'm the CEO and my sister's the COO. So, if I try to jump in and do her job, then she can't do her job well. And that causes confusion for the team. So, it's important to just know what your lane is and then just let them stay in their lane. All right. So, since speaking of One Stop Tax Strategist is our sponsor to the show. The purpose and the mission of One Stop is to bring peace to taxes and purpose to profits to help you live more. And so, we always do this next part. It's called Costly Confessions: your financial wins, misses, and the lessons that helped you keep more of what you earn so that you can live more. So, we're going to jump into that. What is one financial decision that you made early on that you would rethink today with the knowledge that you have today?
My financial decision that I would rethink today was probably being very restrictive in my earlier years. The business was doing well and I thought that I needed everything for myself. I could have hired more people early on. I could have partnered with people and shared, and let's call it, was greedy. I think that's what it was. Later in life, you start to put things in perspective, and money, it's no longer, once you're comfortable in your household and you feel like you're in a good, stable position, you should really be looking for, can I partner and can I align with people? Because I think that smart people grow together. There's always that law of averages for the 5 people that you're hanging around with the most. I wish I would have put myself around better people sooner and said yes to what they were doing. New real estate deals, new business ventures, but I was too concerned with controlling everything. So I didn't lose anything by that, but I missed out on opportunity that could have come later.
Yeah, so just allowing the pie to be bigger and you might have a smaller piece of a bigger pie, right?
That's
I think
right.
that's good. That's good. What's one investing decision that you quietly made, or that quietly made the biggest difference over time? So, what's one investing or business decision that you made that you feel made the biggest difference over time?
On the investing side, it was consistency. So when I first started off, I wasn't overanalyzing anything. I was looking at it through the lens of a business owner of, will I profit from this? And even if there's not much, will it add to to what I'm trying to build? So I'm no smarter than anybody else, but I kept doing that over and over again, starting back in 2014. And when it came, in my example, to real estate, I look back 12 years later now and really happy I did that. It didn't feel like much at the time. You could cash flow a couple $100s of property. It doesn't really move the needle, but now these properties, the tenants are paying the properties off. You have natural appreciation. You look back and you thought, wow, I did all that, but it doesn't feel that special in the moment. So take action, take little steps to get you in a better position. And I think you're going to be in a much better place when you're looking in the rearview mirror.
Yeah, consistency, I'm learning more as I go, just how important consistency is over big spurts of effort. That consistency matters. It's like
You're
a,
right.
a snowball building up. It starts small and then it gets bigger and bigger, so it picks up, but it has to continually roll to keep growing.
Well, people sit on the sidelines a lot too and say the timing's not right now. Again, we're talking about real estate today. So if you were to sit on the sidelines and say interest rates are too high, well, historically they're not. I think it's just an excuse that people tell themselves because they're not ready. And the reality of it is you'll never be ready to pull that trigger. You just have to do it. So to your point, it's a snowball effect. If you did this 10 years ago, no one's looking back and saying, I wish I would have just sat down 10 years ago or 20 years ago and not done it. If you can look back and say that was, a foolish mistake because people that bought real estate 20 years ago are doing great, even though it didn't feel great at the time, or if it feels expensive today, it's like, it's all a matter of perspective. And generally speaking, that's stuff that in the long term will benefit you and your family.
Yeah. Now, opportunity cost. Where do most people have misunderstandings around opportunity cost?
think a lot of people don't recognize that you should have one core measure of opportunity cost. So in the financial space, I'm used to making a particular return on private lending fund that I have. And so what I end up doing is for every new venture that comes out, whether it's shiny or it's stable, whatever it may be, I'm going to stack up, okay, if I took X dollars out of my private lending fund and I put it into that venture, what's the benefit of it? What's the risk associated with it? And so I think that if you can find in your life that good measure, this goes for business too. In business, back on the other side of this conversation, in the dry cleaning space, we were really good at high volume, thin margins, high volume. We had this machine going. And every time I would put so much energy into the next newest thing that had a little bit higher profit margins, but it may be 1 or 3% of my income for the company, but I was spending 25% of my time on it. We often get lured away. And so you have to use something as your model and stick to it and compare every decision against that. It might curb growth for some, but I think that statistically, you're going to be better off doing that to make sure that you're staying aligned with what's best for you in your situation.
Yeah, Alex Hormozy talks about that. He says I forget what the actual numbers are, but for every new thing that you put in your business, there's a dip in efficiency or productivity or whatever it is for the learning curve. And so you have to make sure that the return is going to be a lot higher to be able to offset that because of the downsides to it. So definitely.
Yeah, he's right. Good person to listen to.
Yeah. Yeah. Now, you said living more in your pre-show questions. We asked you what living more means to you, and you said it means being present on your own terms. So what systems or decisions did you put in place to be able to make that happen and make that possible today?
I'm still learning this one, but it's the art of saying no. I'm trying to say no to a lot of things. I think it's common for entrepreneurs to know that they can take on any challenge, and you think, okay, how can I do this? How can I do this? But saying no is very hard. So I'm constantly working on that. In doing so, it's allowing me to be more present. What I do today, again, it was a decision that was made so that I could spend more time with my kids. At this young age, time flies and it goes fast and you can't get it back. And so I realize how important that is. And every decision I make, living life is going to be, how can I be present for my family? Because I'm comparing it to where I was before. I still work hard and I still enjoy what I do. But before, I was almost tied to it and handcuffed to where I had to work all the time. And I would come home and work at night and I would look at my kids and wife, but my head was somewhere else. So it's very refreshing now to not have to be in that position. And if you are and you think you're in your business and, well, I have nobody else to do this for me, that's just the way it is, I would just do what you're doing now. Listen to these podcasts. Look what's out there, because we often don't know. You're caught up in your day to day, your head's in the sand, and you don't know that there's a better way. So watch and take after what successful people have done and try to figure out your own path along that way.
Along those lines, just for our listener, if they're deep in operations still and they don't really know what the next step is, what do you think would be one small shift that they can make to get, help open up some freedom for themselves?
If you don't have a mentor who can steer you in the right direction, you should be reading or listening to podcasts about successful business owners and what they're trying. Who Not How is a great start. It's been around for a long time. That book, I know a lot of people have probably referenced, but it tries to shift your mentality from being that person that can do it all to thinking, who can do this for me? So that was a big mind shift that's helpful. And I would also carve in some vacation for yourself. There are so many business owners that make really good money and they don't take vacations, and I don't understand it. I think that it's crucial for you to clear your mind. And even, let's say if you don't like to travel, then you should carve out time every morning that is, go for a walk, do something active so that your head is clear and you can make these decisions. I have been on both sides of that as well, and used to get up at 5 and open my computer and go. And then if you wake up at 5 and you have an hour to yourself doing whatever, exercising, meditating, whatever people choose to do, your head's a lot clearer and you're in a better position to be the leader of your company and to grow.
Yeah, for sure. Just scheduling it out. Sounds like you're saying being intentional to see kind of what fills your cup and then make sure you're intentional to make that happen.
Yeah, you have to be.
Yeah, that's great. I think that's super helpful advice. And it's being like for me, especially the who, not how. I love that. Like lately, I've been really trying to be more disciplined with that myself. It's like if I'm doing something, I'm thinking, okay, who can I delegate this to on our team? And usually there is somebody. It's just reminding yourself that like building that muscle of delegation and making sure you're empowering your team to do what you hired them to do. So
Yeah, you need to justify that time as well. If your brain is hardwired to look at everything from a cost perspective, then just pick that number that you're comfortable farming out. If you think you're worth $50 an hour or $100 an hour, you pick that number and then find something. You can half it, you can put it in thirds, whatever you need as a mental note to where if you take on a new task, you have to ask yourself, would I pay am I better off doing a $10 an hour task or should I pay someone to do this? So it's good that you're looking at that in your own life and business. Again, I think we all do because we are doers naturally, and that's what entrepreneurs are accustomed to.
mhm.
But I think, especially with technology, it's advancing. Technology and AI are letting businesses advance so much faster and have so many more, operations working behind the scenes to where they don't need the same number of bodies anymore. So take advantage of that too. Educate yourself there. I know we're all practicing that right now as well because you should somehow adapt that in your business.
Yep. Yeah. We're having our first, actually, we just built our first 2 AI employees. So we're testing them out right now. So we'll see how that goes.
We're going to be hearing from Melanie 2.0 soon, right?
Yeah, that'd be great. It'd be awesome if you could duplicate somewhat of yourself.
You can clone yourself now and have an AI agent that sounds like you, acts like you. So I have seen that in my space, and it's
That's
quite
wild.
interesting. Yeah. Evidently, people are asking questions because you're available 24/7. And for whatever you do, let's say in the tax world, people might ask questions to where normally they think, well, this is going to cost me. But if you give enough content and detail to these programs, then anyone can reach you any hour of the night. Sounds like your voice has your mindset. It's maybe not as good as you, but then it's like an agent working for you at all times. And now you know what they
Yeah.
want to ask and how you can help them better. It's amazing what it can do. And for business owners, I always used to think, what if I could just clone myself? How easy would this company be? So now we finally have the opportunity to do that. So I'd encourage everyone to explore that and see if it fits in their business.
Yeah, for sure. I actually got the Hermosi once again. They have such good stuff, but I bought the 6,000 books or whatever, not 6,000, it was 200 books. And so with that came with the AI chat bot, the Hermosi bot, and it gives pretty good answers.
Mhm.
So the chat bots, and I've never seen it where it's actually like sounds like you, where you can call it in, but the chat bots work pretty well.
Yeah, it's amazing stuff. I hope that, again, I hope you find good success with
So,
it because it's
all
there and
right,
it's
we're going to
amazing
jump
once you learn
into
how to
the
use it.
rapid fire section. So if you're ready for that, we'll get going on the rapid fire questions.
I'm ready.
All right. Best passive investment for busy owners. You'll probably be biased on this.
I like private lending funds in 2026. There's been a lot of volatility in the market, the equity market. So that's buying into real property. So that's consistent cash flow. It's something that's predictable, and I think that's a healthy alignment with what business owners are used to.
Mm-hmm. One metric you always look at first.
I look at the person first. You get a lot of material about how good a deal will be. I always focus on who I'm partnering with, and a good person can make an average deal go great.
What defines a good person?
I have to like them. So
Okay. Okay.
you draw this line between, is this somebody that I trust, and is this the right person that I want to be in partnership with? So for what I do in passive investing, so much of my time and energy is spent figuring out, is this person who they say they are? Are they going to be here when times get tough and let's say there's a turn in the business? You want that person alongside you. So I look for good communication. That's often a gap in the real estate industry. Sometimes you want someone who's communicating with you after the deal, and do they have certain qualities about them that I like? So for example, I do endurance running. So if I find someone that does endurance running also, I know, okay, that person has a certain mental toughness to where they're willing to go out and not quit. It would be like if you hire, the type of person I'm talking about. If you are hiring a personal trainer, you don't want them to be obese. These are what people are looking for in traits in those. And I want that person to be someone that I can wholeheartedly trust, because other people's money is at risk. It's a serious deal. And if I have an ounce of doubt or that gut feeling that this person is just trying to sell me on something, I'm out. You can go. There's plenty of opportunity somewhere else. So I'm really trying to read between the lines. And then, of course, I background check. I do all that stuff just to make sure that my gut is as good
smart.
as it can be. Yeah.
That's smart. What kind of endurance running? How long have you ran? Or how long do you like to run?
So I'm just doing marathons right now. And
cool.
I'd like to level up and try an ultra one day, but the training, if you're competitive and you know how long it takes to train for these things, I don't want to jeopardize. I can only wake up so early. So during training, if you're waking up at 4:45 or 4:30, it's like, okay, if you want to do the extreme endurance, I'd have to wake up an hour earlier and not ready yet.
Yeah. My sister is a marathon runner. She's really fast, and she's hilarious. I just ran a 12 miles today, but she does it in she's Olympic qualifying time. She's very fast. Wow. And then we have another team member. We have a team member he's training for an Ironman right now.
Wow.
And that takes dedication.
It does. It's funny too. Marathon runners and Ironman participants, they're proud of what they do. A lot of people, they talk about it, and they should, because it's a good accomplishment. Yeah. But I'm sure that you're seeing that the qualities that they have, they're probably very hard workers, or at least that they're not going to quit when stuff gets difficult.
Mm-hmm. Yeah. No, it's definitely shows who you are. So it's a good thing that you're able to push through. What is one red flag that investors should never ignore?
The biggest red flag I come across is in social media marketing. So in passive investing, you get a lot of advertisements, obviously, especially if that is the algorithm that you've been served. A lot of people, especially from the tax side of it, there's advertising that makes it look like anybody can offset their ordinary income, which is not true. It definitely gets people in the door thinking that they can save a lot on taxes, but that's one red flag that I see. So I'll just say that for the purposes of, when it comes to investing and taxes, have a good CPA and tax advisor in your corner to make sure that your decision, if there's a tax strategy to it, that you're making the right decision based on what you're able to claim and deduct and so forth.
Yeah. A lot of people will come to us thinking, oh, I bought one rental, and so that means I can write off my entire, they think there's going to be this huge thing when they don't realize there's a lot that goes into it, and the real estate professional status and all that stuff. So yeah, that's when the claims are big. All right. And finish this sentence. You start living more when?
You start living more when you can do something that makes you happy and have others working alongside you that makes your family better off. It doesn't need to be all about you. And when you find that person or that team that you are comfortable with and they help you as well, life gets good.
Awesome. Well, Ian, this was incredibly helpful. I think the business owner that is stuck in the grind will be able to, at least it'll shine light and give them hope that there is hope for tomorrow to be able to pull themselves out of their business more and create some more freedom for them. So if you're listening and you're realizing your money might be working harder inside your business than outside of it, this episode was definitely for you. And if you want to get in touch with Ian, you can find all of his links and information in the show notes. He has a free real estate cheat sheet that you definitely should check out. And maybe, Ian, can you tell them a little bit about that?
Yes. So for the listeners of this show, I made a cheat sheet that will help you if you're curious about passive investing and what it looks like. These are the questions I wish I would have known 10 years ago as an entrepreneur. The things that I didn't know when I first got into the industry. So if you have an ounce of curiosity, I'd say go get that and you'll learn quite a bit and hope it helps you.
Awesome. Well, and thanks for tuning in to the Live More Show. We'll see you on the next one. If you enjoyed today's episode, we'd ask that you leave a quick and honest review to help more business owners find the show.